All right, everyone. Thanks for tuning in. I'm Daniel Maguire, research analyst on ARC's autonomous tech and robotics team. We have Brett Winton, our chief futurist. And Brett, today I'm going to throw headlines at you about SpaceX, xAI, Tesla, and orbital data centers. It's a topic that's quite in vogue at the moment. And really, the purpose of this is just to identify what we think are notable takeaways, any implications to educate the investors. But all right, so let me throw the first one at you, Brett. So, there's a lot of speculation going around on Elon Musk using SpaceX to rescue xAI. Do you think SpaceX is a knight in shining armor and rescuing a struggling xAI, or do you strongly disagree with that statement?
Well, I mean, it's hard to argue that a company worth $250 billion is struggling. The foundation model space across the board, and we think there are four competitive bidders for this pie: xAI, Anthropic, OpenAI, and Google Gemini. We think is going to be worth 15 to 20 trillion dollars by 2030. And xAI's credible bet on getting to that market is they have line of sight to the most compute the most quickly to power their service. The reason they're relatively weak relative to OpenAI and Anthropic and Gemini is because they were later to the game at getting to the frontier, the model frontier, and so their monetization efforts have, are not as strong as certainly Anthropic and OpenAI's. So you have to weigh off kind of like the immediate term monetization is lower versus kind of Elon Musk's engineering and product vision is very strong. And given a large volume of compute, teams have been able to deliver services that people are willing to pay for. Now, the combination of the two further secures their line of sight to kind of like occupying like a very large volume of compute in the 2030 to 2035 timeframe. And so from that perspective, as in if the game is going to be won by the person that has the most compute in that time frame, you could say, yes, this is not a life raft, but a rocket ship that's going to like extend them up into the galaxy. Yes. And you can, every one of these companies is like casting about and figuring out their strategy for securing future compute. So OpenAI is kind of allied with SoftBank, which is funding these giant data centers for them. Anthropic is throwing itself into the arms of Amazon and to a lesser extent Google to try to kind of line up the financing. And, to be honest, they're the one that has the, call it, weakest set of partners. And then Google itself is, committing literally almost $200 billion this year in capex to build out its data centers to support its efforts. So I think that the certainly xAI is stronger with a direct alignment with SpaceX, but not a life raft, more of a rocket ship.
And then, so if I'm hearing that correctly, maybe near term might put a strain on cash flow. Do you want to tell viewers how do we model SpaceX? What really is the cash flow machine that SpaceX has that will likely fund it in the medium term?
Sure. So the Starlink system is extraordinarily cash flow generative. It's really the only uninterruptible internet supply at high bandwidth available on Earth, and they can sell it anywhere on Earth. They're in some, I don't know, you probably know how many countries more than me, but it's like 150 plus different countries. United Airlines is rolling it out across the fleet, and people are selectively buying tickets on United, which they were never doing before because they can actually get internet while they're along the way rather than kind of like the slow airplane internet that everybody's used to. And SpaceX has an unfair competitive advantage against everybody in that their cost to launch is lower than any other launch vehicle, and so can send thousands, and soon tens of thousands of satellites into the air to provide this internet that people are willing to pay for, both as kind of like direct primary internet or as backup internet for their business or home to make sure that they truly are uninterruptible. And that'll kick off, in our modeling, it kicks off a lot of cash flow. And they are going to reinvest that cash flow into launch vehicles and launch towers in support of this AI compute opportunity. if they were separate from xAI, which they no longer are, then they would take that and they would sell the compute to xAI and others. But now it's a combined entity. So ultimately their monetization is, can xAI take that compute power and turn it into commercial revenues for providing customers with, essentially custom software agents that splay across the enterprise.
Yeah. Brett, I'm going to throw at you a buzzword that we often hear now: orbital data centers. So, a good segue to the second headline: SpaceX acquires xAI in bid to develop orbital data centers. Why has this just popped up out of nowhere over the last few months, or has it been in the works for a while? And why do you think SpaceX and xAI are likely best to lead?
Well, there have been companies working on it for sure. And China also has been launching computer chips into space.
Yeah.
The reason, conceptually, the reason it makes sense is, if you send a solar panel into space, you can have it fit in the right orbit configuration. You can have it facing the sun all the time. So you get almost all the time. You get, call it 98% power. And so you can use solar economics on Earth. You have to back up your solar with batteries. You only get 4 hours of insolation a day on average. Even if you're in like high desert, it's like 6 out of 24 hours of sun you're getting. In space, you're getting, 24 hours. And so the economics of solar are much better. And then there's the question of, but hey, I have to like pay for the rocket to launch all of these things. That seems extraordinarily expensive. Well, the cost of reusable rockets is falling. So you're in Sam's work, we think with a reusable Starship, we're going to get below $100 per kilogram to put stuff in orbit. And between $1,000 per kilogram where we are today and $100 per kilogram, we think you cross the threshold where the computer power that you put into space will be more economical than digging in the dirt and building a building and kind of like installing natural gas generators and figuring out a way to get the natural gas to the natural gas generators and powering the whole thing up and sticking the chips inside of that. So that's the kind of full set of things that you have to do that SpaceX is seeking to displace by putting the chips in orbit in space. And there's like various like favorable characteristics that come alongside that. And in the kind of, when you build on the ground, you're having to pay for that natural gas over and over. Whereas with space, you're just launching it, and then all of your cost is up front, and kind of like you can fully kind of enjoy marginal economics for the entire time that satellite's in orbit. And importantly, if you're build a big data center on the ground, that's a huge whole pile of work. Like literally, you have to dig up a pile of dirt. You have to convince the people that live next to that data center that you should be able to build that data center. And then you face political opposition because they erroneously think that data center is going to suck up all the water out of their aquifers, which is totally wrong and kind of misunderstood. So you do that once, and you're like, gosh, that was a lot of work. But now, since this stuff is scaling very quickly, now you have to try to do it 100 times. It's 100 times more work. So if instead you say, I'm going to figure out how to do reusable rockets, which SpaceX has done, and do it at Starship level, which gets me $100 per kilogram in launch costs, you do all that engineering work once, and then the incremental orbital data center that you're sending up doesn't incur that same level of cost. So your costs, the more space compute you send up, you're amortizing the fixed engineering cost over a larger number of data centers. And so your cost per data center continues to decline. Whereas on the ground, each incremental data center has the same amount of, pain in the butt cost of trying to convince people to let you build it, crossing over NIMBYs who are like throwing themselves in front of your bulldozers because they have like something against computers, and generally just being kind of like stuck in friction land. So we think at the margin, it's probably going to prove to be less expensive to go in space. And more importantly is your time to continue scaling, or your incremental cost to continue scaling, will be lower in space. So they'll be able to, hit some escape velocity where they're, crossing over terrestrial data centers, and then continue to be growing very quickly, where terrestrial data centers will be more on some kind of like logarithmic curve in terms of as the difficulty of finding good sites increases.
Yeah. And Brett, I'd be curious to get your thoughts because, like, I know today, well, it's an AI race. Everyone's trying to get their GPUs online as fast as they can. You mentioned moving dirt. Well, it sounds easy. There's NIMBYism, there are multi year projects. Do you think, while currently the bottleneck is future, could it get to a stage where a future bottleneck is launch capacity? Especially if SpaceX executes well with xAI, you have competitors like OpenAI saying, hey, they're launching so much power to space very quickly. We need our own rocket. Because you could imagine a scenario where they have satellites ready to go and then their launch provider says, well, you know what, we have like 50, 60 launches booked, we'll put you at the end, it'll probably be in a few months, and then they just fall behind. So do you think
In
that
this
could
in this in this imaginary world, the launch provider is somebody besides
be?
SpaceX
Yes,
itself,
yeah,
because
yeah,
I
yeah.
think
Well,
part of the
it was rumored
yeah.
they were, or OpenAI were looking at, I think it was Stoke Space during the summer, which is a very interesting company, the only other company who's really going after full reusability.
Yeah, I mean, I think that there is, for SpaceX itself, the reason they need, capital is to invest in more launch capacity, because the launch volume required to support AI data centers in space is much larger than the launch volume that we, had forecast for just servicing the Starlink opportunity, and it could be, 60 times more, than we had previously anticipated. And so you need a lot more launch. Now you can imagine SpaceX, consistent with its history, it uses some of the launch for itself, and then it trades that off of like providing some capacity to, other people who want to access orbital space, and they'll probably continue doing that. But the winner in, AI compute in space is going to be the company that, commands the largest launch volume,
Yeah.
probably. And I would say that does become a constraint on your ability to grow once you figure out how to manufacture the satellites. And you'll hit choke points at various spots in the value chain along the way. I think inevitably you have to spin up probably solar manufacturing in the US sufficient to support your satellites. There's a question on the chip side of, are they going to be sticking NVIDIA chips on these satellites? Are they going to be waiting for Tesla's chips to be ready to go on the satellites? Are they going to do TPUs? They could do a combination. But I think that there will be a number of kind of like critical path thresholds to cross between like today and the vision of the future.
All right, Brett, you mentioned Tesla there, which is a good segue into our third headline. Elon Musk's SpaceX to consider a merger with Tesla. Do you think that's the right move now, or is it more of a long-term strategic uh, decision?
It may be inevitable over the long term. Right now, the commercial arrangement between the two and previously three entities was, for sure, Tesla had an agreement with xAI to have Grok available on its cars, and probably a future agreement, maybe already scoped out, where Grok would feed in as kind of the reasoning engine on for the Optimus robots. So there clearly Tesla needs to buy services from xAI. And Tesla is lining up to become the chip provider to SpaceX for this AI compute opportunity. So Tesla is at the very least going to set up to sell the same chips it's putting in its cars and its data centers to SpaceX to loft into space. And it could be, though it's unclear, that Tesla's solar manufacturing capability will be used to populate the satellites that the AI compute sends into space. And it could be that Tesla is providing intermediate feedstock that then SpaceX is modifying to make it space efficient with, some kind of crystal layering they put on top. Remains to be seen. So given kind of like that, I'm selling in kind of some inputs to this company, and then I'm buying outputs from the company. There's probably a lot of efficiency to be gained in just, collapsing the entities into one corporate structure. For now, mainly because there's a huge discrepancy between some of the valuation marks in privately traded entities versus publicly traded entities. I think it would not be in Tesla shareholders' best interest to swap equity with the SpaceX xAI merger at this date. A way to think about it is Waymo just raised money, whatever it was, $140 billion. It works out to $40 million per robotaxi. Waymo has, some
Expensive cars.
3,000 robotaxis roving around, and they get the equivalent value of $40 million per. And, you can look at their roadmap plans and be like, oh, but that's not, in the future, they're going to have more robotaxis. And yes, they will have what, like 4,000 next year, maybe
Yeah, I think
5,000.
3,500. Yeah.
Yeah. So, okay. So it's 35 million per robotaxi. Well, that means a month's worth of output from Tesla's, from Giga Texas, from the Model Ys, assuming those Model Ys can operate as robotaxis, is worth $5 trillion. Okay. Now, that's not actually the way the math will work, because robotaxis are not worth $40 million each. But once they've taken drivers out from behind the wheel of kind of like their, car that costs, call it $35,000 to produce, and can generate, we think, potentially tens of thousands of dollars in operating profit, and that this market is going to scale a lot. And it's pretty clear from the stock price, in the public equity space, Tesla's not getting a lot of credit for that cash flow potential. Elon said that it'll meaningfully hit the financial statement by the end of this year. That, accords with our modeling. And so as a Tesla shareholder, we wouldn't want to exchange, equity for this entity for equity in the combined entity until we're being given some credit for the extraordinarily predictable, but still not successfully underwritten in the price cash flows to come off of the robotaxi scaling opportunity.
Yeah, and that's kind of largely to our work that we've done, and Tasha has led this, but $34 trillion enterprise value opportunity by the end of the decade. And to your point, Brett, on price discrepancy, it doesn't seem like any of that has been considered currently when you look at Tesla, and it's really on the cusp of that transformative change to its business model.
Right. So it's kind of like, I think the right timing for Tesla and the xAI SpaceX merger is probably, my suspicion is xAI and SpaceX will continue to move forward with an IPO, and they will IPO. And then my other, call it suspicion, I really think that Tesla will begin to be given credit for robotaxi as the revenue line item appears on its income statement, because the sell side analysts will be forced, arm twisted into actually modeling the business as it should be modeled, rather than as some kind of add-on that a single digit percentage of their customers elect to purchase. And so, like, a strong indication of this is Adam Jonas, Morgan Stanley, who has covered Tesla for a long time, had a note out when they took drivers out from behind the wheel, or the safety driver out from behind the passenger seat in the robotaxis. Like, this is a very meaningful milestone that they've crossed, where now they can do this. It's clear they can do this, and which is why we think they're going to have 30,000 robotaxis operating by 2030. Okay. 30,000, that's like 8 days of output out of Giga Texas. So, like, what do you think this is going to be like, something that only operates in like this little sliver of Austin or something? It just doesn't make sense, And so I think people will be forced to like rationally treat the entity at some point, probably over the next year. And I think from a Tesla shareholder perspective, then upon real recognition of the net present value opportunity there, that's meaningful. But before trying to build out Optimus and go through all of that, which I think is going to be a huge thorny development pathway and very challenging, I think that would be the time where you could look at a combination of the two entities that's relatively fair. Another way to interpret it is, it's like, once xAI and SpaceX floats, and has floated for a while, so you've had real kind of public market price discovery, then you would say, well, this is, maybe Brett's crazy and robotaxi is never going to yield tons of cash flows, but it's like there's been kind of real price discovery rather than private market price discovery of what these entities are worth.
Yeah. Okay, I know we could talk about Tesla for days, so I'm going to try and rein it back in here, Brendan. You keep spoiling my headlines because you mentioned IPO. Rumors that Tesla are, for one last headline, weighing in a June IPO, $1.5 trillion valuation. Can you talk to me about that? Everyone says it's going to be one of the largest IPOs in history. And really, what will that mean, and implications for SpaceX going to the public markets?
I keep bringing up Tesla. You just said Tesla IPO. You meant
Oh,
SpaceX
did I?
xAI
Yeah. See,
IPO.
yeah, you have Tesla on my brain all the time. Yeah.
Yeah.
SpaceX IPO. Yeah. Thanks, Brett. Yeah.
Yes, I think that the fact is that to increase their launch volume by the amount they need to support orbital data centers, SpaceX will need capital. They'll need capital to build more rockets and build more launch towers, as well as to support kind of the cash flow needs of xAI as its revenue scales. So I would anticipate that they will file an S1 and they will come public, and they're going to raise some tens of billions of dollars. I think that's likely what they're going to seek to do, and it'll be, everybody will get like a lot of like insight into what these businesses look like, because one, SpaceX, has been around, is a fascinating business. You can look at kind of your and our work on it, Daniel, and see how fascinating and interesting it is. And xAI would then be the first, call it foundation model pure play company to come to market. And so there'll be a lot of, kind of insights in their filings as to how these businesses operate. So I think it'll be a fascinating kind of public listing if and as it occurs. And we'll certainly be paying close attention.
Yeah, and really embodies all the research at ARC, right? It's like a convergent story. You have Starship and SpaceX reusable rockets, xAI, artificial intelligence, and as you mentioned, maybe eventually Tesla robotics, autonomous mobility, distributed energy. So very exciting times.
Indeed.
So, Brett, we've gone from orbital data centers, Tesla. I can't get it off my head now. SpaceX and others. Can you kind of give the viewers, just as a parting point, how can they get access to SpaceX today in our venture fund, where it's the top holding, and information on that?
Sure. So, our venture fund is a public-private crossover fund that has, around 80% private exposure. And we've invested in SpaceX a number of times as the fund has ramped. And also we're independently invested in xAI. Now the combined entity is the largest exposure in the portfolio. This is a fund that it's a somewhat unique structure in that you can't, you invest in it and then you can redeem quarterly. So you can invest at any time and you can redeem quarterly, and you have to kind of submit your redemption. And if everybody's trying to redeem at once, you only get out 5% at a time. If you're the only person trying to redeem, you get your entire amount out. And so it gets like attributed pro rata. So you can't count on being able to liquidate the entire portfolio or your entire investment all at once. But that's for an important reason. It's because we're investing in, not just SpaceX xAI, but also OpenAI, also Anthropic, also Databricks, also Replit, the vibe coding engine for, everybody's apps that they're making, so across the entire suite of kind of technology offerings that in disruptive technology that we focus on. And because they are venture companies, there needs to be some gate on the liquidity outflow in the portfolio, because you can't turn around and sell shares in Replit tomorrow. And that's why it's both public, private, and has this, redemption mechanism. We think it's the most efficient and, highest class venture portfolio in the world, and it's available to anybody. And that's, something that we did with a lot of intention. We didn't think it was fair for, venture exposure only to be available to people that were of a certain net worth. And I think that, this is a clear indication as to why. I think that, everybody in the world should be able to invest in companies like SpaceX. And this is a vehicle by which you can do so. And a vehicle, importantly, that when you invest in it, you get SpaceX at its value. So there's some vehicles, it's like, we have SpaceX, but they are vehicles that can trade well above the fair value of the underlying SpaceX. So people are like, yay, SpaceX, and they pay $1 and they get 10 cents worth of exposure. That's like paying $1 to get 10 cents is not a good, financial decision generally. And so instead, when you're buying, you're getting kind of like the actual value of the entities in the portfolio exactly as they are on that day to our best ability to estimate. So that's the both the venture fund and the SpaceX xAI exposure. as and if xAI and SpaceX IPO, then it'll publicly list, and kind of over time we'll take that liquidity and probably recycle it into other venture exposures. But we don't know when they're going to IPO or exactly what that's going to look like. And it certainly is a unique set of assets that you can get in that fund.
All right, exciting times. And thanks, Brett. That was really lots of great information. And for the viewers out there, hope you found it helpful. And we're really looking forward to monitoring this space, no pun intended, but over the coming year. And thanks for joining us today.
Yeah, thanks, Daniel. And mostly I was just parroting your research on rockets back to you. So really, I should have been interviewing you. But
no. Team effort. Great team effort.
Okay.